This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with their closing grain and livestock comments for August 31st, 2016. Corn market closed steady to mixed today, up a quarter, down a quarter. Bean market down 5 to 7 3/4. The wheat market, Chicago down 2, Minneapolis down 4 to 6. Kansas City up a quarter to 3/4. Looking at the grain markets news today, there wasn't a lot around. When you look at the ranges today, we actually had beans try to work higher and then faded down about 12. Beans are the big focal point right now. They've broken the 200-day moving average, and they've got price counts down around $9.10 to $9 at this point. So we'll see how they maintain to see how, see what they can hold up here. But from our vantage point, that's potentially where beans could end up, $9.10 to $9, and we think some pretty good support could set up there. Looking at the corn and wheat markets, we've seen quite a bit of liquidation in those two areas today. We saw the market at least try to stabilize a little bit here. We might have a little more downside left, but possibly 15 cents in corn in the wheat market. The biggest risk there is the carry decay. We have some big carries built into these two markets. And if we continue to see the nearby price come off the board, let's say 360, 370, there's a very good potential that that next month can work down to that level. So there is some risk there on buying the deferred months. We do think September 15th, beginning of October, will kind of set the bottoming action for these markets. And then we do look for some rally potential, but more so in November and December, where we think producers need to be attentive on trying to get that deferred carry then off the December contract. Basis levels extremely important. We're doing a little research. Winter wheat basis from the time of harvest was at 70 under. By the time we were said and done, it was $1.10 under. So we need to watch the basis levels here for corn and soybeans, as we think that could equally happen there. Maybe not to the degree, but still wide nonetheless. Good carries in the market as well. Feeder cattle today down 1 to 2 cents, or $1 to $2. Live cattle down anywhere from 85 to 90 cents, and the hog market was up 12 to up 42.5. When you look through the details here of the cattle market, we had 110 trade yesterday, but yet we had a market reverse. We actually were down upwards of $3 in feeder cattle, well over $1 in lives. We're able to bounce back a little bit, so we do have some reversal action, but we're going to need to see this market stand up on a Thursday, Friday trade to kind of confirm it and have that ability to potentially extend. Hog market, on the other hand, as we get up here in this 57, 58 area, we think we're going to have pretty stiff resistance and struggle to really exceed above that level. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results.